Hello and welcome back. Thank you for being here. Hope you had a nice weekend. And yesterday the markets were closed. Obviously, Monday was President's Day. But today we're running again. And you may have noticed that in the futures, Alibaba and a lot of Chinese stocks, and generally speaking, the market is doing pretty bad again. And we're expecting a down day, which is kind of the norm nowadays. And you may have been noticing here that the before market for Alibaba is sitting at $114 and down 4% is what we're potentially looking like when the market opens today. But I wanted to make this video just to tell you why this is happening right now and kind of explain some things about why the recent crackdown from China has led and potentially will keep on leading to more lows for the Chinese stocks. And obviously the tension between Russia and Ukraine kind of brings some pessimism in the markets. Now this is probably temporary, but the biggest thing is inflation, which keeps creeping up. And we are looking at about 7%, 7.5% right now in the US. And so that's problematic. And in the long term, this is not a good thing for stocks. And I think this is the main reason why we're seeing a lot of stocks actually going down and down and down every day. So what's going on here? You will see that Chinese technology stocks dropped for a third straight session in China. And the Hang Seng Tech Index fell almost 2% Tuesday. And we'll see what the US stock does today. But Alibaba obviously has been one of the biggest losers, and this is definitely going to be reflected in the US stock market. That's just because it's the same company. It's traded via an ADR, which is a depository share, and it's basically the same instrument, but typically arbitrage will bring it to the same value. So we're expecting an about similar loss today for Alibaba in the US market. Now you will see here that the President Xi Jinping, I hope I'm pronouncing him correctly, he has put business models of many titans and especially Alibaba in the firing line. You'll see here that food delivery giant Meituan, again I hope I'm pronouncing it correctly, declined after another 5%. And that's because Beijing actually on Friday ordered it to cut fees. And that's very, very important for the liberation, for how liberal the markets are in China. And you can understand that governments, sanctions and regulations can really, really cause trouble to companies in China because it forces them to lose revenue potentially and basically lose money. And so that's very problematic for investors. And this is probably one of the biggest concerns that you should be having as a Chinese stock owner, if you do own stock. I do myself. But on the other hand, there is a lot of upside. So I'm fine with a little bit of temporary, I feel it is temporary risk right now. And so you will see here that global funds and analysts, for example, including Goldman Sachs and UBS, had actually turned optimistic on the sector in late 2021. Now, this hasn't been going very well for them so far. Since 2022, Chinese stocks have really extended losses. But the thing is that this happens among a climate where everything actually loses value right now in the stock market. And again, I explained earlier why that is. But we're also anticipating Alibaba's earnings very, very soon. And hopefully that's going to be better. But we do expect an estimated 6% drop in quarterly profit for Alibaba. So expectations are generally speaking low. And so that's probably a good thing. And it may actually fire Alibaba a little bit and potentially give us some gains, at least temporarily, for the next upcoming earnings report, which is gonna be on Thursday, I believe, in about a couple of days. So let's see now. Let's examine a little bit further and see over here that Cathy Woods actually unloaded China's tech stocks as Beijing's crackdown continues. You can see here. Now you could kind of expect that from Cathy Wood, I suppose, because she doesn't like value too much. She likes what she calls innovation. I don't know what that means, but she probably does. And her holdings of ARK Innovation ETF have plans to less than 1% from 8% in Chinese stocks. And so that's something to bear in mind. He thinks that there's going to be a valuation reset, as he calls it. And I don't agree with that for sure. I think Alibaba and a lot of Chinese companies, Tencent for example, are pretty good values right now. And I understand that there is the Chinese regulations issue, but I'm pretty sure these kinds of worries will eventually dissipate as time passes. And as a value investor, you should rely on time. Time is your friend. And now this article over here on Seeking Alpha actually explains two catalysts that could push the stock higher ahead of earnings in a couple of days. And what the article mentions here is that Alibaba's cloud and cloud computing segment is actually turning profitable, and so that's a very good thing for Alibaba, which will potentially push valuations higher. But the other interesting thing, very interesting thing actually, is that Alibaba is trading at the 12.8 PE, which is absolutely insane. That's on adjusting earnings, but that's absolutely insane. It's historically very low. It's the lowest actually, well below actually. It's a historical valuation, and it's absolutely insane to have such a behemoth really, and a tech giant that also is growing very nicely and year over year, to actually have a 12.8 PE. This is low. Its valuation is very low. So that's good for us because we can buy more, and it's actually going lower when the market's open, as we saw here. It's about 5% right now. It's going lower and lower and lower. So people who buy here, I envy them. I mean, I bought at 118 myself, so I envy myself too, I suppose. But the lower the better, so I'm fine with that. And I'm totally fine with temporarily the stock going down. I really don't care about that. And so you will see here that Alibaba had a 50% decline since 2021. Actually, that was actually till the end of 2021, the whole year, and has underperformed the S&P. And so it's understandable that people are actually cautious about Alibaba. But the thing is, when you are looking at a company that has so much and great cash flow that's also increasing, we have examined that many times. The company's cash flow here, and I'm just taking a quick look again in this video. Let's actually take it back to the last 5 years. You will see here that the company's free cash flow is growing from 10 billion to 24 billion. And again, there was a little bit of slump in 2021, but still, I mean, it's massively more. It's almost 3 times as much as it was in 2017. And you will also see that there is, if you take a look at the income statement here, growth in revenues, pretty significant also in growth in gross profit, and growth in net income. So basically, you'll see it here. So basically, Alibaba is making a lot of money, and after the company actually goes down so much in a year, you could only expect at some point to catch up with how it's doing financially, right? Because there is so much that Chinese interventions can cause to the stock, and it will happen for a while, and it could even last for a year or two, maybe even 3, who knows? But eventually, money will catch up, and I'm pretty sure, Alibaba will start growing again its stock value, because as a company it's doing great already. So I'm not that fearful about these kinds of problems for Alibaba. I think they are temporary, and I think they will resolve. I understand that people have actually bought at, let's say, 250 or 300, and they are scared, and that's understandable, because from that price their cost basis actually it has dropped a lot, and so I totally understand it. But is there really a point in selling now? I don't know. I mean, it's obviously your decision, but myself, I wouldn't sell, because it's about the fundamentals. I mean, fundamentally, Alibaba is doing great, and so market conditions, government conditions, China, and all that will eventually dissipate. I mean, I'm sure about that. And so, as long as you are holding a company that's doing well financially, you should have no fear, really. And hopefully these articles here tell you a little bit about the story of what's happening right now with Alibaba, and also what are the potential catalysts that could help Alibaba do much better in earnings. And as we are expecting those in a couple of days, I'm definitely going to be making a video to discuss them when they're out. For now, thank you for watching. If you are not a member of our channel, please subscribe and like the video, because that really helps bring this one to more people. And if you did enjoy this video, take a look at this one. that I made earlier, and it's also about Alibaba, and it being added to the notorious markets list in the US. Thank you for watching this one again, and I'll see you soon. Bye bye.